Welcome back to Yorba Radio, also streaming to you live on yorbamedia.com. I'm your host, Michael Yorba. My guest this segment is Nick Santiago, President and CEO of In the Money Stocks. Nick's been around here with us. We've been familiar with him for about 3 years. And let's bring him on right now, Nick. I want to give you some really good accolades about your calls last time you were on the air. Really impressed with one, your negative bias on the gold market, and two, you were looking for support on the stock market. That it really turned out well. Thanks for showing up and making the right calls.
Thanks for having me, Michael. Yeah, we've turned out to be fortunate enough to get that little bit of a bounce that we were expecting, and so far so good.
Okay. What do you think is going to happen now?
Well, I think it's going to be a choppy and rocky time, but I do believe that the market probably holds up into the Labor Day holiday, at least maybe even a little bit past that, because even when we get back from Labor Day, volume will be light. However, the wild card is always the European climate, and so we'll have to see. And today's Warren Buffett move with Bank of America puts a little bit more fear in the markets going forward as well, I think.
Okay. All right. So give me some parameters here. We're talking S&P now, right?
Yeah, we're talking about the S&P 500 on the cash.
All right. Give me some parameters of what you think are trigger points for is going higher, going lower.
Well, I think we're probably going to take out that recent high which we made on August 17th. So, but not too much higher after that. Overall, I think we have a possible. We have Bernanke speaking tomorrow, but that's nothing to do with my work. I think we have a chance of getting to the 1250, 1255 level, around that area. That would be the 50-day moving average, also on the daily chart. And then I think traders will have to really buckle down and get ready, because we could probably see the next leg of this market on the downside.
Okay, so to use a coin of a famous oil man, 1250 before 1050.
Yeah, 1250 before 1050, but 1050 could happen in a pretty quick minute in these days, though. Okay.
Now, you also were talking about the transports holding the 4,300 level, and so far they have. I've got a longer-term chart, and I know you trade much quicker than that, but the only reason I bring this up is, and I hardly ever use it, but it is something that everybody pays attention to, this 200-period moving average. We're looking at 43.31 with a 200-period moving average, and the market's at 43.43. What are your thoughts about that?
Well, the transports actually broke below that 4,300 on a closing basis last week, and actually it was just 4 trading sessions ago, and then we recovered the 4,300 level. But being that the transports broke down below that 4,300 level on a closing basis on weaker volume, it tells me that transports are very weak. After this counter trend bounce, they should break into new low territory. I could actually see them going down to around 3,900 in a heartbeat.
Is that part of the correlation in your decision making on the S&Ps? Maybe.
Yes.
Okay. I wanted to get that from you.
Yeah,
all right.
And it is.
Okay. All right. What else do you see out there that you're looking at for tomorrow's trade today?
Well, as for tomorrow, it's going to be a little bit of a wild card, but surprisingly so, I think the markets have a good chance of holding up tomorrow, and then we go into the Labor Day holiday. So, provided I'm not sure what Bernanke is going to say or do, it could just be a bit of a schizophrenic market tomorrow. I'm a little bit unsure, but I think the markets have a better than average chance of holding up tomorrow, which would be a major surprise. And the reason why I say that is the past few days where we did get a rally in the market going back on Tuesday and Wednesday, the volume there was up pretty good, and it was on bad news. And usually that's telling you that there are real institutional money stepping in here to defend the market. So I think that today was pretty much a good shakeout day for a lot of people, and we have a fair chance of holding up tomorrow and then trading up into that Labor Day holiday.
Now, we never brought out the fact that you alluded to it, but I didn't bring it out. The fact that you're also a cyclical analyst, right?
Yes.
Okay. Give me some cycle points coming up here for the S&P market.
Well, you have 2 significant dates coming up right now. First, we're going to have the 9/11 anniversary, which, the greatest tragedy in American history, and this is a 10-year cycle. After that, you're also going to have the Lehman Brothers anniversary, which I believe is September 15th. So you have a cluster of two cycles coming into one. Anytime that has happened in the past, it usually signals a very pivotal point for the market. So we rally up into that time frame. I would be very, very careful on the long side. I think the market is very vulnerable, and you could have a dramatic sell-offs.
Okay. Now, do you have anything showing up sooner than that? Because I've got some other guys that are picking out Monday and Tuesday as some cycle points, or are yours for a little bit further out into the middle of the month?
I'm a little bit further out, and I'm leaning towards that mid-September.
Okay. Possible rally into that area. Now, I'm a student of cyclical analysis myself, and I know that things can turn ahead of it, and if it drops into that, then you'd be looking at that point.
I would be looking to be a buyer. Yeah.
Okay.
Exactly.
All right.
Change the polarity of it. Sure.
Okay, that sounds good. What other markets are you looking at?
Well, right now, that's what my primary focus is, just on the S&P, because the moves are so volatile right now. Everything seems to be trading together. Looking at this gold move, though, I'm thinking that you maybe want to let your audience know that the 1159 to 1155 level on the GLD looks very, very attractive, just for a bounce. As you know, I'm not bullish on gold for the remainder of 2011, nor am I bullish on commodities in general, but gold is considered more of a precious metal and a currency. But you should be very, very bearish going forward on copper, iron ore, anything industrial metal, be very, very bearish on. But gold probably trades down to that 150, GLD I should say, trades down to around that 158 level, 159. Their 50 moving average maybe will come through there a little bit, but that's a definitely bounce area. But I don't see gold, surging to new highs at the moment. I just don't think that. I think we're going to get some more margin rate increases from the CME and abroad. Yeah,
I was reading on Zero Hedge today. They're expecting another one.
Okay, yeah, there you go. I mean, this last one was pretty easy to telegraph, actually, because this charted the GLD, or if you're looking at gold futures, it really duplicated or replicated, I should say, the SLV chart or the silver futures going back to when they raised margin requirements back at that time.
Yeah, there's a gap to fill down there in the beginning of August, too.
Yeah.
On the GLD.
Yeah, on the GLD, yeah. But, one thing you may want to note for your listeners is that gold loves to trade off those fib levels, and they love gaps. So gold always seems to fill a gap, and it always seems to trade down to these fib levels. And if you take the GLD, I'm just going to use that as the barometer since I have it up here. But if you take the GLD and you just take the August lows, you're going to see you have a nice 0.618 retrace right around 160 level. You overshoot it by a couple points. It takes you right into around 159, 158. Right, pretty good support area.
The 50-day moving average is right now. Got it.
Yes. Yep, exactly.
Okay, so on the futures side, if we were go down there on the GLD to the 158 level, what do you think what does that number correlate to on the gold futures?
On the futures, that's going to be somewhere around the 1640 area.
Okay. All right, so you're looking for one more smash to the downside. We haven't turned yet, as far as you're concerned. You think one more downside on the gold?
Yeah, I think that today's move was just a counter trend bounce, a good one. I mean, it was very, very good, but you had a lot of problems in Europe. But I think they're gonna try to manipulate this thing down one more time, and you'll get a nice bounce there, and then we'll see how the pattern shapes up from there. I don't want to go out too much past that time frame.
Okay, well, since you bring up time frame, do you have any cycle dates coming up on the gold market?
No, I have nothing really on the gold market. We were looking for a cycle high, and that has happened. I wasn't sure if it was exactly to the day, but right within the week, we thought gold would top out, and so far that has happened. And then you'll get a counter a nice bounce off gold because it's been so strong and it's still in an uptrend. And then we could go lower this year on the back of a stronger dollar.
Got it. Let's give time so everybody knows how to get into your webinar. I didn't mean to interrupt you, but I do want to make sure people can know how to get to a webinar so that they can watch you trade.
Sure. You could come into our chat room and just take a free trial. Just go to inthemoneystocks.com, hit the free trial button, fill out your name and information, and you could be in there as soon as tomorrow morning.
Web address?
Web address is www.inthemoneystocks.com.
Okay, and tomorrow morning is when you're going to start doing that. What are they going to see in the webinar?
Well, tomorrow morning our charts go live right a little bit after 9 o'clock, and you'll be able to see us trade the markets live. You'll also be able to have a learning experience. We'll show you the patterns that we're looking at, the support resistance levels, and we'll show you how the markets are setting up, and pretty much everything from there on until 4 o'clock in the afternoon.
Okay. Now, do people open up accounts with you and trade with you? Do they? How does that work?
Well, people trade their own money, and they get to hear our commentary and our setups all day long, and they actually get to ask as many questions as they want throughout the trading day, and we're there to answer each and every question, and we'll show you exactly how we come to our conclusions, and we'll also tell you when we initiate our trades.
Well, with the way that you've been trading, that's got to be exciting and profitable. Nick, thanks for showing up.
Thank you, Michael. Have a great day.
You too. Talk to you later. All right, everybody, Nick Santiago, President and CEO of InTheMoneyStocks.com. Go ahead and go on in there and see what he's doing tomorrow. We'll talk to you later.